Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. We got a good show for you folks today. We're going to talk about the chopfest in this market. We had a pretty good show yesterday. We thought we gave you some good analysis, but we're feeling more convicted, I think, this morning. So we're going to talk about that conviction, where we're heading on the last day of the quarter, heading into Q2 on Monday. We have some individual news, as always, a couple earnings, a couple ratings, a couple analysts defending Tesla this morning. And our guest today will be Marc Chaikin. He'll join us at 8:15. Joel, what is doing in the market?
We're trading in the green here by 8 points at 26.15.5. Major overnight low at 26.01. We all know what's down there, folks. All those lows. Quad low under 2,600. So there's your major support. On the upside, your pre-market high is 20.75. We are leaking from that a little bit. Yesterday's high is a good bogey for me, 26.33.75. That's your highest low since we've made our all-time high. We have crude trading in the red by 8 cents here. $64. Let's just talk about crude for 1 second here. You did have a pair of lows in the lower 64 handle. I believe you did breach them yesterday, but back above it today as well. So, yeah, only got to 63.72 yesterday. So 64 still a relevant level in the May crude futures. Gold's trading in the red here by 3 cents at 13.29.70. Just sniffed 13.60 a few days. Can't hold. Probably heading back under 13.20. And silver basically flat here at 16.255. Dennis, how are you doing here on our synthetic Friday, right?
Again, an opening day as well for your Detroit Tigers. It's going to be a rough year.
I made a prediction that they may have a worse record than the 03 Tigers.
No, they won't be that bad.
I bet.
They won't be that bad, but we're getting 100 losses. We won't get 120. But we might get 100 losses, so it's not going to be pretty.
I don't even want to go into it. Our starting pitcher, I think, for today, Jordan Zimmerman, had an ERA of like 6.
Zimmerman was just
horrible, and he's our starting pitcher on opening day. I know. I'll tell you right now, boom.
They're in rebuild mode, Joel. You got to go through, short-term pain for long-term gain is what they tell me. But, obviously I'm an Edmonton Oilers fan here too, and that hasn't worked for 11 years. So I don't know if rebuilds ever work. But anyways, we're in full rebuild here mode. It's not going to be a pretty season, but let's go Tigers opening day.
They need a new general manager for anything to happen, or the team needs to be sold. And I'm not going to go into that.
You wrote the article that went viral in the D last year, where you thought that they might be shopping the Tigers, and the Detroit Free Press picked it up talking about your article. But the team even responded and said, we're not for sale. So you got a response from your article too there, Joel, from the team. You stirred it up.
Yeah, I fear for that. And I got the Tiger shirt underneath the Michigan shirt here. So I'm still the fan, but boy, oh boy. How many players can you name on the Tigers right now?
Oh, it's a tough names right now.
Cabrera.
All the good ones are gone. We got Miguel Cabrera still, though. We still got Miguel.
Yeah, and Martinez, who's 84 now?
Well, not JD, though. The good Martinez is gone.
All right, people don't want to
tear up Boston. Okay, it's not a baseball show. This is not Stocks and Jocks, although Joel's sometimes on Stocks and Jocks, so he thinks it is. But, let's move on. And, obviously.
Can I interrupt you for 1 second? 1 second.
Okay, yeah. He wants to keep it with sports. Joel wants to do the sports today.
No, at 12:15, we're doing we're 12 o'clock, 12:15. We're doing a special sports segment. We're bringing on Derek Stevens, who has a great bet. He put $25K
at 12:15.
Yeah, we're doing it later today because it's PST time.
First of all, who is he?
Derek Stevens is the owner of the D in Las Vegas. Okay, it's a casino. And I think at the beginning of the season, he put 25 grand on Michigan to win the NCAAs at 40-1. So if Michigan can win,
that looks good now.
Yeah. Well, so he sent out a tweet about hedging. And he's like, should I hedge my bet? And then make a long story short, I tweeted at him. I'm like, dude, you got to hedge this. You got to put $250,000 on Loyola with the points. And I'll explain that at 12:15. But there's a possibility that if Michigan wins and doesn't cover, then he picks up the $250,000 and he's still alive going into the final game. And then if Michigan's an underdog, then he could take the points in the final game. And even if Michigan loses but doesn't cover, he still makes $500,000. Are you following that, Dennis, or not?
You know me with hedging. If I can hedge something, I would hedge it all the way.
You got to come on.
About,
you got to come on at
12:15. If you can hedge, I'm all for hedging.
You got to come on.
There's a way for him to hedge it out. I don't follow the ball close enough and the other team's close enough to know if that's the right play or not, but I like hedging.
Okay. I'm going to tell him that Triple D says to hedge. All right.
Hedge. I've made my whole living by hedging. And I've made my whole, and I still am continuing to hedge here in this market, even with my convicted call there yesterday. And Spencer, counter to what you were saying, I am less convicted today with my calls. But yesterday I was very convicted. I felt like it felt heavy. We lost the market leaders. There was a lot of tells yesterday morning. That's why I was selling. And that's why I was screaming on the show, basically, to sell into that rally yesterday, which worked well. We gave it all back within the first hour. Now, though, different story. We have a lot of factors here. And the one factor, which was mentioned yesterday, I believe by Spinner, obviously Joel talking about it as well, is with that we got window dressing potential here because we're at the end of the quarter. So what are they going to do? Are they going to have the power to pump this a little bit here at the end of the quarter, or are they going to be too scared to pump it and just going to let natural market forces take hold? As of yesterday, I would have thought maybe, but we've had so much chop in here. Yesterday, was one of the choppiest days we've ever seen. Where we had 1% up, 1% down, 1% up, 1% down, 1% up. It was like a yo-yo yesterday. So I think that they could maybe pump it today. Then, though, Monday, that gets more interesting because, if you take that away, I still think there's a lot of problems out here, a lot of unknowns. And I think we are a long ways from being out of the woods. Joel, though, let's go to the technicals on the SPY. Tell us the level you're talking about here. I know you like to look at the SPUs, but I'll
do the SPY for you.
What is the levels you're talking about? You're saying it's the level of all levels.
This might be, the greatest level since I've been involved in the markets.
The level to oversee them all.
Yes. Okay. And basis to spider here. Here you had the one spike low on Friday at 57.83. But another low at 59.41, and then the last two lows are at 58.84 and 58.58. So basically a quad bottom there. And so as long as that quad bottom holds, okay, and what I mean by hold it, I mean taking it out and closing below it, then you have to stay bullish. You have to be on the train. Now, on the other hand, your theory of, okay, we're not getting away from this level and then we're getting heavy, heavy, heavy. I agree with you on that too. Really like to see us take out yesterday's high at 26.3375. That's the lowest high since we made our all-time high back in January. But I think you're going to see more of the same action today. I don't, and I'm going to sit it out because those kind of, you could see on the 15-minute chart here. Boom! It was just yesterday. It was just that's the spider, but it was just all over the place and. It's hard to look at this 26.33, and then we went down under 2,600, back up into the 26.20. Yeah. So support is support until it's broken. I'm sticking with that. And like I said, I just hope they don't tag this thing. We're closed on Friday, right? And then Monday, Sunday night, they start the trading. I just hope it's not one of those occasions where you come in Sunday night, boom. We're down 30 handles, It
depends on what the news is over the weekend.
Exactly.
If they find an excuse
Headlines.
to sell them. The difference with this market that we're in right now, in the honey badger market, bull market we've been in for like the last 5 years, is that when they have an excuse to sell them, they take it. And before, they would shrug everything off. Remember, as we were going up and climbing that wall of worry, there was so many things to worry about, and market just shrugged it off, shrugged it off, shrugged it off. It's not doing that now. It's a different mentality. When we get something political, something concerning there, they hit it. So that's the difference, is that the money manager is trigger happy here now, where they were trigger happy on the buy button, they are trigger happy on the sell button here now. So until that mentality changes, I think bears are still in control. The other thing I'm going to say is the longer we sit here, the more times we keep trying that 257, 258 area and not getting away from it, the more likely it is they take it out. So you want to see it bounce off support quickly and, maybe give you a retest. But we've been 3-4 times down here now. If something hangs down here long enough, and something, Guy Adami, which I said, I think a couple of weeks on the show, when we were on the upside, he was saying, when something, hits, again, he was doing it the opposite way, but he was saying when something hangs out at the highs for 3, 4, 5, 6, 7 days, he's like, it's probably not the high, because they don't give you a chance to sell the high for that long. I'm going to say the same thing. If we hang out here for 4, 5, 6 days in the SPY, they don't give you a chance to buy the bottom that long. So that means eventually I think we're taking it out. But, that being said, support is support until it's broken. So if you want to keep playing out that support level, it can work. There was that one trade I talked about in my trading career, GE, where I think I was selling it short, but I sold out this one level 15 times in a row, and it worked every time. So once something works 3 or 4 times, keep doing it until it doesn't work. It breaches that support, though. We take out the 257 level that we're talking about on the SPY. Katie bar the door, because we are going back to test the February low at 252. That's my bogey. I've got the same bogey as you, so I will call it the level of all levels as well.
And just one other thing to mention, when we did have this rally here, I'm showing the daily chart. Look at this all the way going back to March, April. Look at these tight ranges just inching up. I can't even believe these are daily ranges here. A couple big red bars, but we are not going to be on a sustained rally until we can rein this vol in. It's just volatility precludes, wild market action. And until we could get some stability, our average ranges are still near 50 points. Until we can get those averages back down to 20, 25 handles, it's going to be hard to have a sustained rally. So let's, are we having Mr. Chaikin come on at 8:15?
We're supposed to. We're supposed to. So
what's Chaikin? Marc Chaikin. We always like when Marc comes on, because he gives us his Chaikin analytics in there, and he's solid. Marc has solid analysis. He uses his system approach, and I like it because system approaches can't be swayed by emotion. I trade with a little bit of both. I trade with some feel as well. When I feel the market heavy, like I did yesterday morning, I come in and I start selling them. Today, it's a tough day. So we're just saying we're going to rate this one more point here before Marc comes on in the next minute. We're trading up here, and yes, it feels like a market that could fade. But when I think about the potential of the end of the quarter, potential of window dressing, all the chop we had yesterday, I think you could see a little more chop here today. I think they could pump them at the end of the day. So we'll look out for the pump on Thursday on the end of the quarter, and the dump on Monday. We'll call it the pump and dump. Okay. But I think they could pump them today. So I'm bullish in the short term, maybe. As long as that level holds.
Okay.
You got me talked into bullishness here for a day, Joe. You got me for one day. Okay. One day.
All right. Want to call Mr. Chaikin?
Let's grab Marc Chaikin and see if he's bullish.
Let's take a quick break. I'm not 100% sure he's around, so I want to make sure he'll answer the phone. So we'll take a quick break, and I'll call Marc, and we'll be right back. Welcome back, everyone, to PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick. Can't find Marc Chaikin. Not sure if he's around right now. So we have a guest commentator on right now because we're going to go to earnings and we're going to start with GameStop. And so I want to bring on GameStop, and I want to bring on Nick Donato from our news desk over here to kind of talk us through.
Our resident gamer.
He's our resident gamer, and he's going to kind of digest this earnings report. So real quick, I'll give the numbers on GameStop. GME, $2.02 versus a $1.97 estimate. Sales of $3.5 versus $3.27 billion. So a beat on those numbers. Comps up 12.2%. Fiscal year EPS guidance coming in line. Total sales down 2 to 6% for the year. Nick, what does that mean?
So obviously you would think, wow, great quarter. This was awesome. Comps up 12%. You got to beat on top and bottom lines. Here's the deal, though. Switch sales. This is coming off a holiday quarter, right? Okay. So you got everyone buying systems for their kids. You got them buying the new games coming in at the end. Okay. It's kind of you're looking at that and you're wondering, okay, obviously next quarter is probably going to be a little bit rough. And then you think about the year-over-year comparisons, considering that the Switch came out last year. I was reading a note this morning from Bank of America, and they were saying, wow, they're going to have a really tough time outperforming this year's sales numbers. Their non core gaming aspects aren't quite doing that great. Collectibles and the tech brands. You're just kind of looking at the long-term feasibility of GameStop.
So there's no long-term story here, at least that Wall Street sees.
So Bank of America downgraded from neutral to underperform this morning, lowered their price target from 19 to 11, and their whole thesis was it doesn't matter that they've diversified into these other areas. They're not going to be able to hold up the core gaming disintermediation that's going to happen. And so, yeah, the long-term thesis has always been in question. Now you're looking at this blowout quarter and you're thinking, wow, it should have, absolutely ripped on this. It didn't. That's scary.
Nick, this, and this feels like the same theme here that we see in the big box retailers where you've got a physical store selling physical video games in the mall. We've talked about mall traffic being in tough. And then everybody's just doing everything online here now. I mean, you have so many, of these gamers that, don't need to go in and buy the physical game there anymore. Yeah. And, from my understanding is, a lot of the money is being made, inside the games themselves. A lot of times the games are almost, they give them away, these online games here, because they want you to buy the stuff that's inside the games. So, how does GameStop evolve, to start to capture that market? And, obviously the analysts on Wall Street maybe think they can't. Is this a case of just, being taken out because the industry has evolved without them?
They can't capitalize on those microtransactions. Those go right to the publisher.
And they don't make any video games themselves, right? They're just selling the games.
Yep, they're the middleman, and that's what's a little bit scary from that end. Yeah. And they get squeezed a lot. And what they're working on now is optimizing the locations that they currently have right now. I'm a pro member. I go there from time to time. I still like to trade in some of my older games to try to get the discount. But when it comes down to it, retail, all retailers are getting hit, and GameStop's not different.
Hard too.
Yeah, and the street really respects, for the most part, they really respect management. They've been able to last this long. They've been able to show great sales. I mean, look at this quarter. They obviously had a great quarter, but they just know it can't keep up this long. And so you're looking for the tech brands to come through. When they bought all those stores from AT&T, that hasn't really come to fruition. Their collectibles business segment, while that's not going to move the needle. It's done all right, but it's really not something that's going to really change the whole fundamental thesis of the GameStop story.
What about this dividend? The dividend yield on this thing now is 11%. Are they going to have to cut that here? Because when I see something with an 11% dividend, I think automatically it's probably not sustainable, or everybody will put their money in it. Is that an issue here? Have they talked about the dividend at all? Because, I believe it's still, I'm not following the story closely, but my system's still showing 11%. So are they still committed to, keeping this dividend, or are they going to have to cut this, you think?
Tough to say right now. I can't really predict that, but I would definitely
throwing you under the bus on that one.
But I get it, Dennis. You're testing me. You're making sure I'm up to snuff. I don't know at this time. I would say it's definitely something to keep an eye on. That's one of the more attractive parts of owning GameStop, right? You get a nice little dividend. I would say
I'll speculate that they aren't going to be able to support it. I'll speculate right now. As a trader, I can speculate. That's my job, to speculate. When I see an 11.27% dividend on a business that is in trouble and a chart that looks like that, it makes me think the next, shoot a fall might be that dividend there. They did say, I just kind of went through the conference call comments while I was talking with you. I was trying to do two things at once, and they were saying they were committed, but I don't know. Commitment is one thing, Dennis, and plausibility is another.
Dennis, look at that yearly chart. I mean,
it's
could
ugly.
Not look that ugly. And they have a new console generation cycle. So when the Switch comes through, you're thinking, wow, this would be great for retailers. This is going to be great for GameStop. Oh my God, this chart, I didn't even realize how bad the daily was. I mean, it doesn't look good right now. So I think be aware. It did catch a downgrade today. Price target lowered from $19 to $11 at Bank of America.
Baird lowers their price target from 23 to 18. Benchmark lowers their price target to $12. Centene Capital lowered their price target to 17. So, you have analysts chasing price all over the place here today on this GME. But I mean, the story here is just not the story I think I want to invest in.
One last thing I don't want to leave out is not this quarter, but 2 quarters ago, they came under a little bit of duress from their sales practices. It was a controversy called the Circle of Life, and it had to do with their used game sales. So make sure, management might be pressuring even more employees even more to be more aggressive with the sales. And that was kind of what the whole controversy was about, was that management was setting these unfair marks for their store managers to attain. So make sure you watch that going forward. I think it got swept under the bus a little bit, but Kotaku had great coverage on that. Something to look forward over the next quarter or two, whether or not management is really going to put the heel down and put these store managers to the test.
All right, Nick, thanks for the time, man.
Thanks, guys.
All right, I'm going to call Marc in like a minute. I can bring Marc on the hopper. He did get back to us.
Bring him in on the fly.
All right,
Marc can handle it on the fly.
Should I bring Marc on right now? Or
do it.
You want to do another stock? We can
bring in Joel in. I see the Michigan shirt. Go blue.
Right.
Jump over. Yeah, let's jump over to the other stock that reported last night, PVH Corp, because it is trading up $6 in the pre-market there. Here's one of your retailers that has held on very well here. Obviously, they make the apparel, but I mean, this stock compared to a lot of your other retailers has really done well. PVH keeps continuing to outperform the other stocks in the sector. How'd they do?
$1.58 versus $1.46, 2.499 billion versus 2.35 billion. So a beat on the top and the bottom for the Q4 numbers. The Q1 EPS guidance came in higher than the estimate by about 30 cents. Sales growth at 15% for the quarter. The fiscal year EPS guidance was higher by about $1.30, or $1.20. So good guidance for PVH.
Joel, what do you think here? I mean, this breaks out now from a little technical base that it was forming there between 140 and 144. We get up to the upper end of the range here at 150, 152. I mean, you can look at Lululemon. Lululemon held those gains yesterday, actually went higher, which was nice to see. I mean, Restoration Hardware blew out and continued to go higher, went way up to the next major resistance point up at 95. It's a huge level for that stock. PVH, though, as you're trading it now, looking at it at 150, it's a psychological level there. Do you think this is one that could have follow through?
I was dead wrong on Lulu yesterday, and I think Restoration Hardware. So
I think we thought they might fade a little bit, and they didn't.
Yeah,
so we called a lot of things right yesterday. I don't think we got these ones
right. So I'm just gonna go, with that theory. I mean, they're a maker of things, right? So people are going to have to wear their Philip Van Heusen shirts and whatnot, whether they're sold at JCPenney or Amazon or whatnot. So that's, one reason why the stock has probably held up better than others. It's all about 152. You had an after-hours spike up to 152. You can look on your daily chart. You can see a high at 152.13 and a high 151.55. So I'm not a fader of this one. 152, that's the area. Maybe lighten up along there, but certainly a lot of room on this, and they keep buying it and keep buying. I mean, what did Lulu? I mean, how much did Lulu end up yesterday? I think that took out its pre-market high. Let's see. I know it got way overdone, but just going, yeah, it did. It did get over the after hours high. So just going to base on that theory, I'm not short in PVH today.
Yeah, I agree. I think I'm not fading the retailers there either. There's other better stocks if you want to be fading. But again, I'm concerned here with the end of the quarter about fading this market altogether. What about Marc? Is he still hiding in the background?
Yeah, I'm bringing him on right now. I was waiting for you guys to finish your PVH
okay.
conversation.
Here comes Marc.
Yeah, here comes Marc. Marc Chaikin from Chaikin Analytics. I hope he'll be on with us in 2 seconds, I think. So
3, 2, 1.
Let's see if he answers.
Picking them up here. We do have 2 other earnings stocks to talk about there from this morning as well. We've got Constellation Brands that reported, ST Zebra, and we have Lennar, LEN, that reported as well. ST Zebra getting a 6-point pop here this morning. It's up 3%. I mean, I guess they drink, in a bear market, they drink in a bull market. So this is one of your more stable stocks for that reason here, but it's been a pretty good performer. I mean, 2017 was a great year for Constellation Brands, 160 up to 220. Now it's up to 227. It's within striking distance of its all-time high here. Spencer, can you quickly give us those results?
Yeah, $1.90 versus $1.74 on the Q4 EPS, 1.77 versus $1.75 billion. So good Q4 numbers. Fiscal year EPS guidance was in line.
It's a big level up there at 230, Joel.
Well, I'll just give you the pre-market high, 28.50. Linked a little bit, a buck off that. Up on not very much volume, but low price stock. You can move it around here. Let's go to the dailies and see what Dennis is talking about here. Oh, yeah. I mean, well, first of all, street leaning kind of a long way into this report, so you might be see some overhead supply. Just keep an eye on those daily highs. Actually, 27.21, where we're trading now, is your 5-day high. Des has just rounded it off to the 230 level. I'll go with him on that. 230.40. That was one high that you're going to have to contend with. All-time high, 231.83, and your all-time closing high, 230.34. So that's not too far away. So take a look at that. That was your high on March 19th.
I'm going to keep trying Marc, but in the meantime, let's go through Lennar, right?
Oh, before
grab the Lennar report.
Before Lennar, Dennis, I want a steak dinner. I got a steak dinner back from you.
What do you mean?
I want a bet.
You want a square bet, and there wasn't a steak dinner. He's so sneaky. It was a lunch. You won the lunch on the square, and the market helped you out there. I came within striking distance, and the square collapse came. So I thought it could see 59.50 before 49.50. I was obviously wrong on that. Congratulations, Joel. You got a lunch back. You only owe me 5 lunches now and 3 steak dinners.
It's Stargazer said it was a steak dinner, and Stargazer.
Wasn't a steak dinner.
So where are we at?
It was a lunch.
So okay.
Wait. Settle this after.
I'm even after lunch. I'm even on lunches, and I'm down 1 steak dinner. Okay, let's go ahead.
Look at the way he is. He's not even on lunches, and he's down at least 2 steak dinners, and I think it's 3.
Okay, wait, Marc.
8:30 imbalances too.
Wait, Marc, are you with us? Oh man, I thought we had him.
Spencer.
Sorry about that. Okay, well we can't. I'm having a hard time getting Marc. I'm having a hard time getting Marc today. Okay, why don't you run through some imbalances?
GE 258,000 to buy. Have we heard if it's Warren that was buying here or not yet? Did they say anything? I mean, there was a lot of action yesterday. I wasn't paying attention to GE.
No.
GE. No, there's been no confirmation on if there was Warren Buffett buying a couple days ago or not. That was the rumor. GE continues to slow, steady climb since then. It is trading up here in the pre-market again, and 258,000 shares to buy of some institution that says, hey, maybe that 258,000 to buy is Warren. Maybe it's Warren we're seeing every morning here with these buy and
He doesn't buy on opens. He does VWAP. He goes VWAP.
He's a VWAP guy?
Yeah.
He's got his algo. Warren's an algo trader?
Just look at yesterday's high, 13.95. Good volume the last 2 days. Another high at 96. I mean, this thing, it takes out a whole number. And it went below 13. It went to 1273, 1282. That was your double bottom. Nah, for me, it has to clear 14. If it finds out that it wasn't Warren buying, look out below.
If they come out and say Warren says, no, I didn't buy any GE, it'll be right back down at $13. So you got to watch headlines a little bit there. I don't think we've heard anything from Warren there, but if they get him on CNBC or something and they ask him and he says, yes, it's going to pop. He says, no, it's going to drop. So
and what if he says he shorts it? He's shorting it.
I don't Warren short stocks. Has he ever shorted stock?
No.
Berkshire short? I don't think so. I don't think they short stocks.
All right.
Okay.
Spencer, what are we doing?
So all their imbalances are all pretty small. I mean, we're early here yet. It's a mixed market. Did see a theme yesterday. And the theme that we saw was value stocks coming back into favor. I see Procter & Gamble with a small buying balance today, 32,000 shares. I mean, these were big moves in some of the value stocks, some of the staple stocks. Look at Clorox yesterday, one of your staples, up $5 yesterday. Procter & Gamble, we already talked about, had a great day. Philip Morris and MO both had huge moves there yesterday to the upside. Coca-Cola had a nice candle there yesterday. You had some of the biotech, some of the like Allergan, some of those value names that have the low multiples getting bought yesterday. AGN had a great day. Merck and Pfizer both had pretty good days as well. It was buy the low PE stock day. So they were selling the high PE stocks and they were buying the low PE stocks. We know that's good for my portfolio. So my portfolio did well yesterday with that, move to value investing. If value investing ever comes back into favor, my portfolio is going to take off.
Yeah, good moves, nice little defensive posture, taking money out of some of the high flyers, pulling it into something, dividend, whatever. Nice move in those. And TLT here, what did it do? Hanging on, trying to clear 122 yesterday. Stargazer's talking about the XLP ETF. That's trying to come off a bottom.
That has all those stocks in it that I just mentioned. So XLP moves with the Cokes and the Procter Gambles and the Philip Morrises. It's all, the defensive consumer staple stocks.
Yeah, Pepsi had a good day. J&J had a good day.
It was by the defense. Market was playing full-on defense yesterday. Full-on defense. Not this morning as much here. Well, we don't really know yet, but obviously we're seeing a lot of stocks bounce back here. And some of those tech stocks that were just wrecked yesterday are getting defended here this morning. If you're looking at Tesla, obviously Tesla had the worst day of them all. It is trading up here in the pre-market. Not that much, but it was down after hours last night. So it's trading down 253, 254. So if you look from where it was last night, it's up $6 from there. You had both Nomura and KeyBank coming out and defending the stock. Spencer, give us the details on what Nomura was saying.
Yep. Tesla. Yeah, this is an interesting one. So Tesla, of course, they have their deliveries coming out next week. We had Nomura saying that the company will, this is a quote from the note, will show meaningful progress in ramping deliveries, peak production in Q1, despite missing their Model 3 production guidance. So they're defending it. I didn't see what KeyBank said, but that's
they lowered their price target though, Nomura. So they defended it, but they lowered the price target from 500 to 420. So they're not quite as bullish as they used to be.
Well, you got to cover your base.
Their also commentary was, it says largely their concerns were largely without merit. Did you say that? Did I repeat you?
No.
Largely without merit. So that was commentary from the note from Nomura. And then KeyBank. What did KeyBank say?
I didn't see what KeyBank said.
Let me find out.
Yeah.
Let me go see. I saw the KeyBank note. Oh my goodness. When you look through Tesla headlines, there's so many of them. You just kind of scan and scan and scan. I saw something from KeyBank this morning. Oh, where is it? Okay, no, I don't. Oh, no, here it is. Shares are oversold. KeyBank says the shares are oversold. So your KeyBank and Nomura both defending Tesla here this morning. That being said, stock not bouncing much. So you got a little lift here. Yesterday's low is obviously very important, $252 here. I don't know what to say. I mean, you had the Moody's report that came out that obviously punished the stock because they were saying they might need to do a capital raise here. They're still burning cash like crazy. The cars are cool. I sat in the car, like I said, a couple weeks ago. The cars are really nice. I'm impressed. I think, I'd be interested in buying a Tesla. It would really neat to sit in one. It makes me feel a little more comfortable. But the multiple is just too much. I mean, I cannot, there's no multiple. I mean, the company's burning cash. So until they start to show me that they can actually make money, it's not the description of the stock that I hold in my portfolio. That being said, like I said before, in my portfolio, and if you want, we could talk a little bit before. Do we have an 8:35 guest?
Nope.
We're just waiting on Marc. Why don't we do that segment? We were going to talk about, investing in this market. And I obviously wish a couple days ago we would have did it because there was some, pretty good buys here in some of the defensive names, which we did mention the last couple of days. But, just from portfolio perspective, there was a couple of people, said they really enjoyed the segment when I talked about what my holdings are. I'm more of a value guy. I'm more of a traditionalist, the CFA background. I like to, crunch the numbers and take a look and say, hey, I think, this is, value at a reasonable price or growth at a reasonable price. And, or just flat out value stocks. I like getting paid. I like my dividends there. Tesla just not the description of my type of stock. That's why Tesla will probably never be in my portfolio, because I don't like to buy stocks that don't make money. So that being said, these are high growers and eventually they can make money. I mean, Amazon was one that I never had either, and it would have been a good one because it's, had, a high multiple all the way up. So, and, we knew they were growing the top line. Tesla's definitely going to be growing the top line. But I'm more of a bottom line guy. It's just my style of investing. So it's worked for me for 19 years, and I'm not going to switch it up because what works for you for 19 years might work for my next 19 years. I mean, I'm probably halfway through, really my investing career, halfway through to retirement. So why change it up if it's worked for me in the past? So I'm going to stick with my value investing theme. Tesla just doesn't fit that description. But, people were asking me, what kind of stocks do you see out there? Do you see some value stocks out there that you're looking at sticking in your portfolio right now? Absolutely. I have a list going here, and Procter & Gamble is right near the top of my list here right now. I wanted to get it down at 70. I don't think I'm going to get a chance there. I was asking Nick just a few days ago when it was 70, 60. I think I'm going to get a shot at this thing at 70 because that's where I bought it the last time I bought it was 68 and I wrote it up to 90.
Hey, Dennis, hold on 1 second here.
Yep.
We don't have Marc Chaikin, but we do have someone that's interested in buying Tesla.
Oh, okay, sure.
I'm going to put him on. You might know who he is. Hold on.
We
got Raznik.
He's the biggest Tesla bull that.
Okay, let's go back to Tesla.
Okay, so wait, real quick on the Tesla thing. We had a stock twits meetup in the office a couple of years ago, and I was talking to someone about this, and it comes down to just are you a believer? And Jason Raznik is on with us now. You're a believer.
Mm-hmm.
Yeah. Okay. So explain.
It's almost like how can't you be?
Oh, okay. So
I just gave the case on why can't you be. It's just a matter of whether it's the valuation.
I was going to say the only way you can't be is valuation.
And that's the way I invest. So it's nothing against Tesla. It's just not for me because I'm more of a value guy. So I will trade Tesla all day long, but in my portfolio, I don't put stocks that don't make cash or don't make money. That's my concern.
Yeah.
But that being said, Amazon was a great performer.
I can't get a word in edgewise with this guy, Dennis Dick.
You're on. I was just finishing my point. You're on. You got the mic.
Just like you alluded to, there's no way you'd invested in Amazon at $7 like I did, and then sold it at 10 like I did. So I didn't keep it for 10.
Yeah, that's right.
I bought it at 20 and sold it at 10. But so there's no way, you're right, because there's no financial model is going to show you that Tesla's a buy now. However, the Jason Raznik financial model will show you that Tesla will ultimately be $1,000 stock, in my honest opinion. I did do a financial model. I'm a simple guy, very simple. I take a discounted cash flow model, net present value, like I learned in business school, and I do that over a 10-year time frame. And the valuation number I come out with is $1,000. Sounds crazy. At $55 billion valuation, which it was just a couple of weeks ago, it was more than GM. But what do I believe? I believe Tesla is the only vertically integrated energy company that is worth a DTE Energy, it's worth a GM, and it's worth a mobility, time mobility, like a Uber type transportation company. That's what Tesla will do. I mean, Tesla for 6 years has been out there with these cars. Everyone, Volkswagen, BMW, GM. Oh, we're going to introduce that Bolt that the GM has. They're ending it. I mean, it's insane. The number one luxury car sold last year is what? No, it's not a Porsche. No, it's not a BMW. It's not a Mercedes. It's a freaking Tesla. I mean, number one. The stats are ginormous, and people will get the picture very soon. I'll give you a couple little tips so you can go for future years. A couple things that people don't talk about. When there's a power outage or when there's a hurricane, who is the company to restore power? Who is it? I don't know who you're going to go to. I guess, Puerto Rico went to Tesla. In 90 days, they restored 80% of the power for Puerto Rico. Now, I get it. They're using solar. So Brent over there says, Jay, I don't know. What if it's not sunny out? Then why are they going to use Tesla? So Brent makes a good point. If you don't believe in the sun, if you don't believe the sun's going to come out tomorrow, Tesla is a for sure short, no doubt about it. But I also think you have bigger problems in this world.
But there's a lot of other solar companies there too. You think Tesla's better positioned than say like First Solar and a lot of these other solar powered companies that are obviously investing in that area.
It's a good point. But what Tesla's been able to prove, they did it in Puerto Rico, Australia, and just did a little installation in New York or in Brooklyn. They were able to do it turn around so fast. Do I know why that they're able to turn around fast in First Solar in Australia and take over the whole power grid? I don't know why. I just know
Elon
that.
Musk.
And then not even only that. I got 4 neighbors now that use 80% of their power through Tesla. They have a power wall that saves the solar energy. They cut their electric bill by 80 or 90%. That's Tesla. Listen, the obvious isn't there right now. Those semi trucks, everyone's probably laughing at them. I personally know and have seen one up close. BMW disorder, or not BMW, FedEx disorder, 20 more. UPS is 100. They don't come out for a year or two, but those electric trucks are insane. They're just insane. It almost seems like they're make-believe. I'm not saying there's not headwinds in the stock. There are headwinds in the stock. I actually think the stock could fall down more than what it is today.
But you're a buyer on this pullback.
I'm a slight buyer. I'm actually waiting for another 15% to really go large. I think you're going to see a couple other negative items come out in the next week or two, having to do with auto drive. But so I didn't buy yet. I am going to buy today. I'm going to buy 2 times or 3 times in the next 2 months or next month. I'm expecting to see another 10 to 15% because of this auto drive stuff. And I don't want anyone to die, obviously, but what this is going to cause is regulations in the industry. I'll be honest, guys. I drive a Tesla. When I drive it, I don't have to touch the wheel, and it's better than me. It's better than me driving. Like when I'm driving, I scrape the wall. I scrape it. It's true. It's true.
Wall scrape because you're on your phone too much.
I can go. I couldn't find my badge to get in the thing. I can go. Take a picture of the car right now. There's a whole yellow paint all over in the corner now because I scraped the wall. That's me. If you just said auto drive everything, it would be so much better. So much better. I'm telling you guys, it's hard. It hurts to buy a Tesla right now. It really does. But it's something that until I see another auto company really go at it. I mean, look at Dennis. We're trading 257.78. A lot of volatility in this thing. We were up at the 380. Not in October. I mean, this
almost 30% off, 25% off sale.
I mean, and then look at it in 2000. So, I mean, Dennis, this is not for your trading strategy. It's just not. Now,
it's for my trading strategies. It's not for my investment portfolio. But maybe you could talk me into it. I mean, okay, so here I look at it: $43 billion market cap. The one thing that interests me is that you get to participate along with Elon Musk, and he is smart. I mean, what really sells me is the SpaceX stuff he has going on. I mean, when he can drop that booster from thousands of feet in the air and land it on a pad that's like 4x4 in the ocean. I mean, that was just incredible to watch.
So Dennis,
this type of stuff
I'm not coming to Tesla just to come with the stock. I read the book on Elon Musk, unauthorized biography, and it went through all that, like how the space stuff, the SpaceX. They wanted to end that thing so many freaking times. They're like, there's no way they can do this. There's no way. He was going out of business, and then he made it happen. In 100 years of space travel, right? Or how many years? 50 years? I don't know.
100 years? I'm sorry.
I don't know. We've been trying for 100 years
Keep
at
going.
least, so he might have an argument.
Exactly, but Spencer Israel likes to focus on the unimportant. Okay, so in 50 years of space travel, how many times did NASA think about landing the rocket in the same spot? I mean, seems so obvious. Why would you send a plane away and let it disintegrate? It's like cut your cost by 80%. Elon Musk did it. Elon Musk cost to fly to space is 1/10 any competitor. I mean, he's destroying Boeing space 1/10. So a lot of the technology that they're going to be using for space, they'll bring to Tesla.
Are you concerned at all that Elon will send himself to space and then he's not around to lead Tesla?
He wants to die on Mars. He said that.
No, not concerned at all.
Okay.
See, there are some concerns of Tesla, which you almost had me thinking about. I just got lost in train of thought, but that's not something he's going to do now. He's not even considering it.
I just want to make sure he doesn't send himself to Mars and then abandon.
There is a couple of concerns for Tesla. I'm trying to think what I was going to say. There's one big concern. The biggest concern of Tesla, and this is going to scare people. I don't know if anyone's listening, but if you are, this will scare you if you're going to buy Tesla, is the amount of employment turnover. So what you'll often see if you Google Tesla employment, you'll see a list of high-ranking product managers who are no longer there. There's a guy. Why
do you think that is? Do you think he's tough to work for?
Nope. 2 things. There's a guy named Jim Chanos who's short the stock. He also shorted Enron, and he called it right way back when. One of the reasons he shorted it is because of all the people who left. And that's what Jim Chanos will say. Look, all these people are leaving. There's, whatever. So Tesla does the same model as General Electric, where they get rid of the bottom 10%, which I think any company, it's probably a good thing to adopt, keeps people on their foot. And, I see companies not improving, and not making things better. And I think Elon is really sticking to that. Like, if you're not improving, you're dying. If you're not growing, you're dying. That's the attitude Elon takes. There are people that left to start their own battery powered companies and stuff like that. They made a lot of money at Tesla already. I mean, that stock, as you know, is up 10x from 4 years ago. So they cashed in and then went and did their own thing. So that happens. And then there's some people that this Model 3 supply chain, the production was terrible. So the guy running that they got rid of. The thing that I find most unique with Elon Musk, he can literally push an orange through a watermelon, or watermelon through an orange. I'm not kidding. The guy can make anything happen. And so I almost like when everyone's counting out Tesla. I think that puts Elon in another grid, because everyone's been like, huge fans of Tesla. Right now, Tesla's getting a lot of negative press. So it's one to watch. I don't expect to see greatness overnight. I expect that you'll keep slowly seeing it. And I do expect, we're in 2018 right now in March. I do expect when we come here next year, March 2019, you got me on the record saying this, that you'll see Model 3s in every city, and everyone's going to want one. And Tesla stock is going to be double, triple what it is today. That's what I do expect.
Doubling over the next year.
And let's just be
$500.
Yeah, and let's be clear. I own Tesla stock, so I'm not. I don't like people talking their book and not own up to it. I don't want any of you guys to buy right now, because I want it to go down to 240. There's my. That's my
so you can buy more.
That's why I want, 240 is the number I want to get at. My original buy was $35.18. That was my original buy. And then I bought up a little bit, a couple times, but that was my, original. And I wanted to get to 240, and I'm going to backing up the truck, as Jim Cramer and Brent would say. Okay.
All right. Thanks a lot, Rez. Appreciate the insights.
He's talking me into it. Into it.
Hey,
it's not easy.
Where can they find us? If anyone wants to know my Tesla opinion, ask Brent in chat. I'm Benzinga Pro. Brent has some Tesla specials, where you can get discounts. So hit up Brent on chat. I'm telling you, I'll give you the secrets behind Tesla, and I'll show you the financial model that will make it a $1,000 stock over the next 10 years. Absolutely. Okay.
All right. I think you convinced him, Dennis.
I'm almost coming in here and buying this morning. He's almost got me. He's almost got me.
It's Michigan Final Four this weekend. Joel Elconin will be out there.
Oh, yeah. Joel might not be with us.
Hold on. In the second half, at the 18-minute mark, look for Joel running on the court. He'd be wearing a Michigan cheerleader outfit, trying to lift up a cheerleader. I don't know if it's going to be on. I don't know if it's going to be on TV, but he's going to be one of the guys under lifting up a cheerleader. Look for Joel. He is your host of the show. He's running out the 18-minute mark. Please don't tell the NCAA, because we want to make sure it happens. Thanks.
Yeah, Joel might not be with us Monday and Tuesday, depending if Michigan wins over the weekend. But so that's something we'll have to keep an eye on. But I think he's kind of convinced you, Dennis, a little bit.
He's talking me. The one thing I look at, and you see the market cap now 46 billion. It's starting to come in. Or 43 billion here now as of yesterday. So at a certain point in time, you got to say, Elon Musk's brain is worth some money. So even if you don't like that he's burning cash like crazy, it's just a matter of you're participating with a visionary. And, he's probably the best visionary, that we've had. And, I don't even know how long, he might even be a better visionary than Steve Jobs was. But impressive, what he's done. The SpaceX program is phenomenal. I would love to invest in the SpaceX program. That is obviously not part of, a public company there. That's what I like a little bit better, because I think, the whole future is obviously, going, there. But you're participating along with him. So to a certain extent with Tesla and the solar arguments are good arguments as well. Its valuation just scares the hell out of me.
And, remember what Nick said? Nick was bearish to stock for a long time, Nick Shaheen, and he just started to look at it as a power company, utility company, as well as a car company. So we did fill a gap in Tesla in the lower around this 250 area. So you can always nibble. You can always put something small in your portfolio like this. But I need to see a little bit more technical stability for me. So, Spencer,
if you want to go to the opposite end of the spectrum, we were
Jason
came on. We were talking a little bit about investing, portfolio from a valuation perspective, and there is a ton of stocks that are cheap. I mean, I'm already a little bit too much biotech, so I probably am going to be laying off. But I mean, Merck is one of my biggest positions. If I didn't have Merck, it's one that I would probably be interested in. We still have an aging population. Drugs aren't going away. You may have some short-term pain still over the next few years if Trump continues to attack drug pricing. But that being said, I don't think drugs are going away, and a lot of these stocks are trading with nice dividends and very low multiples. So, I like the biotechs and I like the drug stocks. So, you can just pick your poison almost in there because a lot of them just, I own. So what I own right now, I'll just tell you the ones I own. I own Celgene, which has not been good. I'm in Celgene from a long time ago. I'm averaged in at $27, but actually I'm not anymore because I bought more at 95. Yeah. So I'm actually brought that average up to almost 50, which maybe was a mistake. But Biogen, I'm in from, I bought Biogen back at 50. So I'm in it from a long time, but I'm sticking with them. It's still cheap here. Merck, I bought that around $35. It's 55. I've had it for a long time. I still think it's cheap. I'm in Pfizer. Allergan has been a dog in my portfolio, but there's still value here. So, you're looking at these things. Yes, there's concerns with pricing going forward, but I think there's still value here with an aging population. So I like all the drug stocks still right now. Also, I don't own any food stocks. I'm very interested in some of these food stocks. The multiples are still not that cheap, but something like Kraft Heinz, KHC, I mean, you're looking at a stock that was $95 at the beginning of 2017. It's 61 here now. Is ketchup going away? Are these packaged consumer food products going away? I don't think so. It's a busy world here right now. I think people, still eat a lot of stuff, just from pre-made packages there. So I don't think that stuff's going away. So look at a Kraft Heinz. Campbell's Soup is a little bit different, but it's been beat up too. I mean, the food stock's been annihilated.
Wait, Dennis.
If you're putting KHC in your portfolio right now, you got a dividend here. I'll just grab it. 4.05%, completely out of favor. So expect to take heat on this type of stuff. But when you look at it 10 years from now, I think it gives you some nice diversification. I think you'd be happy you still did it.
Okay, wait, Dennis. So what would be a buy signal on a Campbell's or a Kraft Heinz?
Well, from an investing standpoint, yes. You don't really, I look at it from a valuation perspective. So just when the stocks get too cheap, I put them in my portfolio and I forget about them. I often take heat on my investing, portfolio there, and it's because I'm buying stocks when they're out of favor. I am a momentum trader and a contrarian investor. When I put something in my portfolio, it's when everybody hates it. So usually it will give me more heat, but I'm not coming in there, on margin. I don't buy anything on margin, so I can hold it forever because I'm not on margin. If you're buying stuff on margin, stuff falls 50%, you're 2-to-1 margin, you're out of luck. I don't buy anything on margin. I'm buying it with the cash that I have in my portfolio, and my time horizon is 20 to 25 years. My time horizon is when I'm 65 years old, and I need to, start using this portfolio to live on. So that's why, that's why I take heat, because I'm a contrarian investor. So I'm always looking at the stock charts that look the ugliest, but I'm looking at them from a fundamental standpoint and saying, here is something that is just overdone, and I'm going to buy it. Everybody hated Apple back, last year. And this is when I bought more Apple. I had it, years ago too. But originally, if you go out to the weeklies or the monthlies and you look at Apple, we'll go to that chart here right now. I bought Apple back at the end of 2015 when everybody was hating it. Stock went under $100 and then went down to 90, and everybody's like, "This Apple story is over. iPhones are in trouble." There's people coming out with price targets of $60, and I'm like, this was the beginning of 2016. This is when I put a big chunk of Apple in my portfolio. It was $92. And now it's $168. So, now everybody gets up here and they start loving it again. They're doing it backwards. The people who are on, your analysts on CNBC, they always seem to be chasing price. I'm not one that does it. I buy when there's blood in the waters. Tesla fits that description. The only problem, it doesn't touch the button of valuation for me, which is why I probably can't pull the trigger. But there's lots of stocks out there that are cheap here right now from a valuation perspective. So, run some scans even, and look at multiples. There's lots of other different stocks, different sectors too. But, Micron I've talked about too, and Micron I'm chasing a bit here. I still said I'm going to buy some more at 50. I probably am going to do that just because I still like the valuation, although Sean scared me the other day talking about how cyclical the earnings are there, and he's not as bullish as he once was. But I think, there's still some value here. I mean, the other tech stocks, too, that have value, some of these old school tech stocks have still value as well. They've run a little far, though. But if Intel could come into the lower 40s, I don't know if that's going to happen. When we get an ugly market, starts getting $44, $45 again, I'd be interested. Cisco could come back under $40. CSCO, I'm interested. So these are stocks that are on my radar, but not quite there yet. But some of the drug stocks and some of the food stocks are there right now.
Okay, a couple things I'm looking at here. I have a current position in Twitter. I would really like to see this back down in the lower 27s. I'd like to add to that position. Getting sick of this Western Digital, another holding.
That's a great one for you, though.
Yeah,
it's come down, but
it's come down hard. But I don't think I'd be adding to that one as much as Twitter. On my radar, General Motors. I originally wanted this at 40. Once again, value play, nice dividend stock, and get some capital appreciation. So I like what this is.
I just don't know on the autos, and this
go ahead
is if they're value traps. I mean, I bought Ford and I bought it too early. I'm in from around $13, and it's been a value trap. It has not been good. And I've been getting paid a little dividend while I wait 5%, but it's been losing me more than that. So I'm just concerned that maybe Jason Raznick has an argument, and these guys, are going to be taking a back seat to a company like Tesla. Even if you don't buy Tesla, they're still going to be eating a big chunk of maybe Ford and GM's business. And if that's the case, then these companies might not be making as much money as they have in the past. And if the stock's going to go up when the times were good, are they going to go up when the times are bad? So that's my concern. GM, yes, it's come down. Yes, they're still planning a lot of electric cars. Yes, they're going to be participating in this electric car market. Yes, it looks pretty good as a technical level here, even at $35. I mean, this is where we hung out in 2017 for a long time. The one thing holding me back here, though, is I don't know that wild card of how much market share Tesla is going to eat from them. And that's my concern, or, even any other auto companies that come out with electric cars. So the industry is evolving so much here right now rapidly. I'm not sure, there's just some unknowns there. And that's why I can't bring myself to pull the trigger on GM, even though my valuation, it fits all the description of, what I'm looking for in my portfolio. Cheap, nice dividend. It's come back to a nice technical level. It looks like it's a buy here at 35. I'm just scared of getting Ford. The same thing Ford looked pretty good when it's coming down at 13 and it kept going lower. So I'm somewhat concerned about GM for that reason.
Okay. Also, the old standbys, we talk about, dividend paying stocks. I mean, AT&T, you're not going to get rich on any capital appreciation. If this deal does go through with Time Warner, makes them a much more diversified company. Verizon.
One thing though on AT&T before we move on to this one, and I own a small position in AT&T. It's very small though. I've liquidated most of it. I'll tell you why. I think there's a lot of competition coming there. Yes, cell phones aren't going away, but they're going to continue to get cheaper, these plans. So margins, I think, eventually do start to get squeezed here. There's other businesses there too. They got the DirecTV tied in there now. But if you look at Dish Network, it's still a standalone company. It's been destroyed. I mean, there's so many people who are watching stuff online here now. You just wonder if, a lot of these cable providers there are going to be making the kind of money that they have in the past. Obviously, internet providers are still going to be, and AT&T is one of the big ones there as well. So that's one portion of their business that is still going to do well. It's a cash cow here, but I'm just concerned about some of their other businesses getting squeezed. It's a nice 5.6% dividend here, but I'm not jumping over, and doing hoops here for a 5.6% in AT&T because I don't think it's as safe as it used to be. I think, the dividend is safe, but I don't think the stock is as, I think you could see this, go into a downward cycle because some of their other businesses might get squeezed. That's why I'm not adding to AT&T here. And it's very small in my portfolio. I'm even consider liquidating the small portion of it because it's like 0.2% of my portfolio now. It's really small. I've sold most of my AT&T.
And then just the other sector I need to do a little bit more research on is just AI, the artificial intelligence. Mazer Robotics is a stock that has been on my radar. That's come in a little bit, very volatile. The other one too, I'm never going to stop thinking about this one, Veritone. It's just had the run. Now it's kind of dead money, but I just think,
killed.
Yeah, I just, and that would be the kind of chart you would kind of look at, Dennis. You
look at that, but there's nothing there. So when I crunch the numbers, so you might have the technicals, but you don't got the fundies. And yeah, you have a good story, but they're not making any money. And until they can show, some products that can sell, like a Veritone here, very small company, speculative capital only. Yeah. I do have an indirect piece in Veritone. The way I played it was through ACTG, which is a little, they have a big chunk that they own, Acacia Research. They have a big chunk of Veritone that they own. I think it's a huge chunk of stock that they own. of VERI, but they got other businesses as well. That's the way I've been playing the VERI, is through ACTG, but it has not done great either. I'm in from $4. It's $3.35. So it hasn't been a good one either. But, there's a wild card there with the Veritone. It's speculative capital only, though, in that one, because that one's very speculative. I mean, you're talking on Veritone, a company with a market cap. Let's go grab the market cap VERI. VERI market cap is sitting at 221 million. I mean, you're talking about a very, very small company. So it's a wild card. It's a lottery ticket. Maybe they can figure it out and get a product that goes, and maybe can take off here again. But as of right now, they are making money, and the story is out of favor here, at least in the short term.
Okay, I just wanted to check on this GSVC. There was a lot of hype on that one about its exposure to Dropbox
and Spotify.
And Spotify, and people were. I mean, that was just sell the news on that one. So that was just something I've been thinking about. They had the big run up ahead of the Dropbox IPO, and then it sold off. Let's just take a look at Dropbox. 29 is my number in Dropbox. Closed at 30.98 yesterday, so looking good after its IPO. Let's see here. Not sure. Question. We'll let you go after this, Dennis. What type of computer should I use to trade? And I would say a good one, one that works, and one that's reliable. And I don't know. I love Dells, and I'm a Microsoft guy. I've never traded on any Apples. So
it's a good. I've never traded on an Apple either. It's a different user system. I'm just not used to it. Some people say they love it that they trade on Apple. I trade on HPs. All of my computers are HPs. I've always been an Intel chip fan, not so much an AMD chip fan. I don't know. Some people say the AMD processors are better. I've always just been a fan of the Intel chips. What I'll say is, one thing is, I'm cheap. I mean, we know that, I go to, Big Lots, I used to, and, buy, cheap stuff. I'm not cheap with my computer system though, because I need it to be reliable. I need it to be good. So I will always buy a more expensive computer. And I like the HP, I like the i7, and talk about, the chips that are inside there. I usually, whatever the newest chip is, I usually upgrade my computer at least every 2 years. So my trading computer, because it's important. I mean, you can't have, computer freezing or slowing up on you. So I keep up on my computers, and, I like HP.
All right. And I'm a Dell guy. All right, Dennis.
Dell's fine.
Okay. All right. S&P's hanging up here near the highs of sessions. We went a few minutes over here, Dennis, so we'll let you get ready for that opening bell. We did miss some stocks here, so we will stay on for a few more minutes. And Starbucks caught a downgrade here. Spencer, who cut Starbucks?
Wedbush downgraded Starbucks this morning. Let me pull up the rating in front of me. I forgot what it was. Starbucks got downgraded this morning. Wedbush to neutral, from buy to neutral at Wedbush.
Well, let's see what we're doing. We're trading down 64 cents in the pre-market. Not a pretty chart. You had a recovery. Let me look at the 15-minute before I say anything. Pre-market low is down just above 57 at 57.09. Looking at the daily charts, what's the daily tell you? Is there anything there at 57? Not really. Yesterday's low. Last 2 days low is 57.14 and 57.22. So if it doesn't hold 57, we got some more work to do I think I'd have a target at 56.40, because that splits the lows from Monday and Friday, Monday. And I'm sure a lot of people would like to see that mark at 57.90.
Any other questions in the chat? I know I'm sorry that we didn't get to Marc earlier. He had some phone issues, that darn iPhone. So we'll get Marc on the show next week. But were there any other shows, any other stocks in the chat that we missed during the show?
Entry point for along here in JP Morgan. I mean, of course, a lot of things I do is market dependent here. And if I'm depending on these lows holding from Friday, I'm comfortable here. I'm very comfortable here taking a look at the pair of lows that it had at 106.76, 106.65, trading up at 108 now. I'd like to 108.67. If I could get this is for a swing trade. This would be something that at least you got an easy out, right? Right. We have an easy out if it takes out the low of the move. Let me see here. And the low of the move, low of the move is 103.98. So a lot of it is market based. And right now the market is holding that support in the S&P 500.
I'll run through a couple of the other ratings that I saw this morning. We mentioned Starbucks. We mentioned the comments on Tesla. Here's what else I saw this morning as far as ratings goes. Not a ton to speak of as far as upgrades. We got some. Here we go. There we go. We had an upgrade this morning to Harley Davidson at Longbow, upgrading the Hog to neutral. That was kind of the biggest one that I saw as far as an actual upgrade is concerned. Yandex, YNDX caught an upgrade at Citigroup to buy as well. As far as downgrades go, we had Duke Energy catching a downgrade at Goldman to sell. We have GameStop. We mentioned that. Bank of America. We mentioned Starbucks. And that was kind of it. Edge Therapeutics, ED, GE catching a downgrade at Credit Suisse to underperform.
Oh, that's a big one. That got killed yesterday. All right, just Rob Hood, I had a really good looking food chart in here, and it was FLO. This is a total Rob Hood chart trying to break out here, 2150. The high had another high here at 2157. So definitely a chance of a breakout. So as opposed to buying, dentist stocks that are, some of these food stocks that are just in the trough, here's one that's showing some life here. Room to go to get up to the all-time high. Challenged the 2150 level back in February 2016. So there's a good level for you. George Gotch from the Google chat has a couple stocks for us to take a look at. Movado, they had earnings. Did they actually sell a watch, Spencer? You got the news on Movado?
Yeah, Movado looks like they sold a few watches, actually. So the numbers they gave this morning, Q4 adjusted EPS of 52 cents. I don't know if that compares to the 26-cent estimate. It might. If that's the case, it's a huge beat. Sales 149 versus $132 million. Good guidance for the fiscal year. EPS and sales both higher than estimates. They're also raising their quarterly dividend from 13 cents to 20 cents per share MOV.
And boy, you got a double top in the pre-market trading that you got to contend with at 38, 55, and 65, and you've backed off, but not very much. So, of course, I'd like to see some follow through that pre-market high. Up and not much volume, big move, 14% move. I just want to alert any traders and investors up in this one. If you're looking for a target after that, you need to go ways back here to find anything near the $40 level. That was back in November of 2014. You had a high of 39.44. So if it's if you're looking for a little bit more over the pre-market high, then 39.44 is a level. Spinner, I did not talk Bitcoin today. It did break that $7,800 level. Little egg on my face here. So it broke the support, and it just seems to be drifting lower. Let's go to the daily chart here. Bitcoin just losing that support. So to now get back over 8,000. All right, that looks like is that TITN here for Jazz? We'll do that one. TITN, Titan Machinery, trading up $1.25. 21, that's a print. Man, found all kinds of support in the lower 19s if we get there. Let's look at the pre-market high in this issue. Pre-market high way up here at 21.94, but only 1,000 shares traded up there. So let's go back to the daily chart. According to the daily chart, maybe use 22 as a target. We're only 48 cents away. You had a high of 22.18 on February 27.
We'll do one more. PRGS. They had earnings.
Give me the earnings.
They had earnings yesterday after the bell, and they beat on the EPS. They beat on the sales. They also raised their guidance for the fiscal year.
Well, selling off into it. So street leaning the wrong way. I would have told you I thought 40 was pretty good resistance because you had 3 highs right there at 40. So if you do pull back, old resistance, new support, 40.95 is where you're trading. Not much in the between 40 and 42. One intermediate high at 41, double top at 41.70. We'll keep an eye on that, and just a little bounce here, but could have some overhead supply. All right, Spencer, I guess I'm done talking stocks here for a few days, unless I can join you from San Antonio. We'll have to see what kind of internet connection I have.
We'll see what happens. Good luck to your Wolverines over the weekend. I suppose if they don't win, will you be with us on Monday? Hard to say.
If they don't win Saturday, I'm trying to get out on Sunday.
Okay.
I want to get out of Dodge. I don't want to be around there. I don't want to say something mean to Sister Jean or anything like that. So,
okay.
Hopefully, win Saturday, hang out Sunday, Monday night will be the game, and hopefully be traveling back on Tuesday with my daughter. If I know we have some guys and gals here that are interested in sports and sports wagering, and I'm always interested in low risk, high reward, whether it's the markets or sports wagering. We got a guy coming on at 9:15, Derek Stevens. He's
9:15 Pacific.
He had 9:15 Pacific,
yeah,
12 Eastern Standard Time. He's the owner of the D, Las Vegas, and he put 25 grand on Michigan at 40-1. You guys could do the math, and I got a hold of him. He tweeted out, should I hedge? And I got all kinds of hedging ideas. I know everyone thinks Loyola could be a layup, but I have a hedging strategy for Derek. Angie, baby, it will be right here on this station. Yeah, we're going to do the same thing that we do normally. We'll be talking about markets as much. So Angie, baby, tune in. Derek should be fun. Get his insights on the Final Four. And I don't know if he's going to want to talk markets much, but definitely want to talk about his bet on Michigan. All right, everyone, have a great trading day. Let's see if the Spoos can hold these gains of 10.25 at 26.1775. Yesterday's high could be a target, 26.33.75. And you guys don't have to be told where the support is in this market. It's stand out over the last 4 days. Have a good one.